Hey everyone, and welcome back to Tradewisenet. Here, I discuss trades that I'm taking based on the methods explained in my book, Profitable Hedging and Trade Management Techniques in Forex Trading. You can see that here on the screen. I've opened up the amazon.co.uk page. It's available in other countries as well, so your country Amazon page should have it. Amazon site should have it. And I'm also going to put a link to the Amazon page in the description below so that you can access it. Right, so let's talk about our trading strategy. You can see the trading view page that's been opened here. It's on your screen. I've got the list of pairs that I trade, and these are also explained in my earlier video. I've kind of arrived upon them. I trade on the daily time frame. That's a personal choice. You can um, choose any time frame as per your liking or what suits you the best. Um, I use a daily time frame as I have a day job, and so I really get around 20 minutes of time, 20 minutes to half an hour time in the non-working hours in the evening where I can spend time on my charts. Right, so here we're looking at the Australian dollar, Canadian dollar, and I will be using only one indicator, the super trend oscillator. The reason for that is that it's got three indicators in one, but more importantly, it gives me all the information that I need. The three pieces of information that I'm looking for are one, when to enter a trade, two, when to exit a trade, and three, when should I be looking at doing any trade management. And I'll come to those are what I mean there. But typically it's giving me the pieces of information that I need. Right, so how are we going to be uh, trading? Now let me go back. Let me pick a time at random. Let me go to, let's say, January 2003. Um, and there we go. January 2023. So if we start with the first trade that we would take, so here, this is a good example actually. So you get a sell trade on the 5th of January, so we take that trade. Now, as it goes, on the 12th or the 13th of January, you get a trade in the opposite direction. So what we would do here is that we would take a hedge trade on the opposite direction. The difference being that it's not going to be a 1:1 trade, but a 1:2 trade. So if the sell trade that we'd taken on the 5th of January is, or the 6th of January is, let's say, one lot, the trade that we take on the 13th of January are going to be two lots. So essentially what we're trying to do is to say that the trade that we'd taken initially, it did not go in our favor. So we will now try to close that trade at break even. So as the trade goes up, somewhere around there, the trade would close and you would have broken even. So essentially what we're trying to say is if we are first time right, we make a profit. If we are not first time right, then we work to come out of the trade at a break even or maybe a small profit. So that's essentially what we are trying to do here. Right. So two trades taken, and we are at break even. We keep going. Then on the 31st of January, we get a sell trade. We take that trade. We keep going. And when we come to the 3rd of February, you get another long bar, which is saying that it's probably in an oversold position. What I would do here is really take half my profit, put the remaining trade to break even, and put a trailing stop and let it run. So if I had, let's say, taken the trade here, let me put a line there. Adjust that a little bit there, and we come till here. We take half the profit, put a stop loss here at break even, and let it run as a trailing stop. Now, it can happen that you may get stopped out here because the market started going upwards. But if it may just touch us, so we'll be out of the trade, but we would have anyway made a profit. But if it doesn't, then you would be making this profit here as the market goes down. Let's keep going. So then we come here to this buy signal, and we take this buy signal, keep going. The market goes against us. We get a sell signal. We take a 2x sell or a short position. It keeps going. It comes to somewhere there, and we would be breaking even on that, and we will exit the trade. Similarly here, take another buy, market goes against us. Here, when it goes against us, now we take a 2x sell. It again reverses, goes in the other direction, so I will take a 3x. This also doesn't work for us, and here is when I will take a 4x, and when it comes down, it will help me to get out of all these trades at break even. So as you can see, either you're making a profit or you're getting out at break even. You get another buy signal. You take this trade, you go up, and you make a profit. You're out of the trade. You take this sell signal, you make a profit, out of the trade. Profit, again, that's a big profit that you would make there. Profit, profit, and then you arrive upon this one here, this trade, wherein you take a buy signal, then you take a 2x sell signal, 3x buy, 4x sell, and then a 5x buy, and this takes you out of the overall mess that we'd got ourselves into. Sell, then a buy, it breaks even somewhere there. Sell, and then a 2x buy takes us out of the mess. That will be an overall profit. That would be an overall profit. Profit again, profit again. So you get the picture, right, of what we are trying to do here. Now, it's important to note that you must keep a good margin in your account so that when you are taking like 2, 3, 4, 5 trades, you don't get into trouble there. So it is a risky proposition overall, but if you do your trade management well, you should be all right there. So just to reiterate, keep in mind the first trade that we take, if it goes in our favor, we make profit. If it goes against us and we have to hedge it, we are then really looking at coming out of the string of trades at break even. Right, so let's talk about the trades taken this week. So on the 6th of January, as I made the notes there, and you can take your time to read through the notes. So we took the trade on the 6th of January, a buy trade. It went against me, got an opposite trade, a sell trade, which came in on the 9th. Took that trade, and on the 10th, the hedge helped me to come out of that at break even, or a small profit, in fact, is what we made on that one. So overall, no profit, no loss, or a small profit. Let me keep going. So the Aussie Swiss franc here, this is a good example as we'd got into a few trades here, and when we started, so December 13, there was a buy signal that came in, took that buy trade, um, went against one good day, but then it went against me, got a sell, took that sell, taken double the size there, as you can see. That went against me again, and on the 3rd of January, I had to take a buy trade, and well, it went in my direction in the first couple of days, but you can see that it's reversed. So you can see that we are in a hedged position. The idea or the plan is to come out of this at break even. So let's see how that one goes. Aussie New Zealand, no trade at the moment. Euro Aussie, again, we are looking at coming out of this set of trades, these set of trades at break even. We are currently in a couple of sell trades and an old buy trade. We have got a new buy trade on the 10th of January, so that's a new trade that we would take on the Monday or Sunday night for me. So the idea here for the Euro Aussie is to come out at break even. Euro US dollar got a buy trade here the 7th of January, took that buy trade, went against me straight away, got another, got a sell trade on the 10th of January, took that trade, doubled the position. The plan is to come out of this as at break even. I need to update my chart here. But yeah, you get the idea. Pound. Right, so let's keep going. The pound CAD, currently no trade on. Was in a profit, taking the sell trade, but closed that earlier, so no trade at the moment. Pound yen, there is no trade at this point in time. There is, in fact, looking at my notes, I'd taken a buy trade there, and then got an opposite sell, took a 2x sell there, and closed the trade at a slight overall profit. Silver, a profit there, took a trade, the buy position there, went in my direction, and well, I could have closed half and let the remaining run, but overall, no, because we were in an overall downtrend, decided to take the full profit there. Oil, currently no trade on, so we will keep an eye on that one. So overall, we have one trade to look at for the new week, and that one is just looking at my this, yeah. So it's the Euro Aussie, and we would be looking at taking a hedge buy there to try and come out of this one. All right, so here's the list of trades that I take. So I maintain a journal. This is readily available. I've put it on Google Docs. There's a link to this spreadsheet in the description below. It's a simple Excel sheet showing which are the trades that I've taken, the current status. A bunch of them that are closed, some are open, some recent ones got closed. Um, the date of the trade, which direction I'd taken it in, buy or a sell, the lot size overall, whether I made a profit or a loss on them, and a cumulative profit as well. So I started this new sheet, Excel sheet, at the end of November, so I'll continue to maintain it. Also, I maintain certain notes here on the right-hand side, basically for my understanding of why I have taken an action and when I've taken an action. So if we just take the example of the silver trade, so I'd taken a point 0.1 lot size in earlier on in the buy direction, and then on the 9th of Jan I'd closed half, put the remaining at break even, and then on the 10th of Jan the remaining trade closed with a profit. So I should probably just change this to closed. But yeah, you can take a look at this spreadsheet um, in taking your time. Right, so Telegram channel, the link to the channel is in the description below. You can just click on it and join it. This is where I call out my trades during the week in real time, whether it's taking a new trade or doing any trade management, closing a trade. And I will see you next week. Happy trading, everyone.